I'm Hugo Batten, Managing Director of Aurora in APAC, and I'm joined today by James Hart, our Research Lead for the APAC region. We're here today to talk a little bit about Aurora's Q1 Australian NEM Power and Renewables Market Forecast, the PRMF. And to start off, we're going to rapidly run through some of the updates we've made in the last quarter with James. James, maybe if we could kick off with the New South Wales Altessa auctions. A couple of rounds have been run. How have we factored those into our forecasts?
Anytime that auction is run and we have the results from that auction, we try and build that capacity into our forecast, and that will affect the short-term build-out in our model. So as an example, from round 2, where we saw a gigawatt of firming capacity, and round 3 with half a gigawatt of long-duration storage, those known projects build into Aurora's short-term capacity outlook before, in the longer term, our model takes over and decides what capacity to build based on the underlying economics of each technology.
And then the draft ISP 2024 has come out, and that had some updated inter and intra-regional transmission timelines. What are we focused on there?
For this quarter's release, we've really focused on 4 particular upgrades, and they're upgrades that clients have asked us a lot of questions about because they're relevant for many projects. These upgrades principally affect the New South Wales renewable energy zones, so the New England and Central West Orana upgrades. And in Victoria, the 2 upgrades of interest are Western Renewables Link, which we've seen delayed, and VNI West, where we've seen a change in the timing to reflect new information that AEMO has on how realistically the project can be delivered. And those changed timings are visible on the slide here.
And then finally, LGC prices generally remain buoyant.
That's right. So the futures continue to remain at similar levels to what we've seen in previous quarters. And that is flowing through to the bids that we're seeing from renewable plants, and also the frequency with which we see negative prices down around that LGC level.
So we've talked about green auctions, transmission timings, and green certificates. How have those changes in inputs flowed through our long-term price projections?
This quarter, the price projections look fairly similar to previous releases. We haven't seen any dramatic movement in the forecast. Wholesale prices on a time-weighted basis are still averaging between $80 and $120 per megawatt hour across the forecast, depending on state and depending on year. And in particular, the shape of the forecast looks very similar, where we're generally seeing wholesale prices come up through the 30s as some of the coal-fired power stations are retired and gas sets the price in the market more frequently.
And then can you talk briefly about the focus areas for Q2? I imagine particularly the full ISP implementation.
Yeah, that's right. So while we've implemented those major upgrades, the change in timing for those upgrades in the Q1 release, there are more changes to the transmission network that have been canvassed by the draft ISP, and we'll look to incorporate those, as well as monitoring the market for when the final ISP comes out in the middle of the year.
And then finally, the capacity investment scheme, obviously a major announcement, a lot of gigawatts being talked about. As new information comes through, I imagine we'll be incorporating that as well.
Yes, and we get a lot of questions from clients about the capacity investment scheme. That is one of the many government programs that we are waiting for more information on. We're also looking for more information on the final design of renewable energy guarantee of origin certificates, Victorian offshore wind, South Australian hydrogen jobs plan. As additional information comes to light, we'll take a view on it and build some components of it into the forecast.
Terrific. Well, thanks, James. Reach out for a discussion if you'd like to talk about any of these topics. Otherwise, thank you for your time.
Thanks.